Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at energy fuels.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. What we're seeing with energy fuels is this really fascinating transition. For a long time, they were seen as just another developer, but now they're becoming a real producing multi-commodity player.
Right, focusing on uranium, of course, but also rare earths and these heavy mineral sands.
Exactly. The story has fundamentally shifted from potential to actual performance.
Okay, so let's unpack that performance aspect. The aha moment seems to be their recent operational execution.
It really is. They basically crushed their 2025 uranium guidance. The market was expecting one thing, and they delivered something much better.
Better in what way? What are the hard numbers?
Well, they produced over 1 million pounds of finished uranium U3O8 and mined over 1.6 million pounds of ore. This wasn't just hitting a target. It was, comfortably surpassing it.
And that kind of execution, that reliability, is what gets you in the door with the big buyers, right?
It's the bedrock for commercial stability. An unreliable supplier just doesn't get those long-term contracts, and what we're seeing now is the reward for that.
So what kind of contracts are we talking about?
They've secured new, really crucial long-term contracts with U.S. nuclear utilities, and these aren't short-term one-off deals. They extend deliveries all the way out to 2032.
Wow, okay, so that's almost a decade of cash flow visibility. That must take a huge amount of risk off the table.
A huge amount. For 2026 alone, the guidance is for deliveries between 780,000 and 880,000 pounds of U3O8, all pre-sold under those contracts.
And what does that look like in terms of revenues, say, for the most recent quarter?
For Q4 2025, uranium sales are projected to bring in roughly $27 million. It's becoming a very predictable, strong operational base.
But I did see one potential wrinkle in the numbers. Q3 2025 margins compressed a bit, down to 28%. On its own, that could look like a red flag.
It could if you don't dig into the why. And that's the key here. It wasn't an operational failure. It was actually a deliberate inventory decision.
What do you mean?
They were selling off their older, higher-cost inventory that had just been sitting around, sort of clearing the decks,
Ah, okay. So the real margin story, the future profitability, is tied to something else.
It's all tied to the Pinyon Plain mine. That's the next chapter.
So Pinyon Plain isn't just about more volume, it's about changing their cost structure.
Precisely. Pinyon Plain is all about high-grade, low-cost ore. It's the engine for the next phase of efficiency. The ramp-up is expected to yield between 1.1 and 1.4 million pounds.
And processing that specific ore is what's going to expand the margins in 2026.
Significantly. That is the entire plan. If they pull this off, they position themselves as one of North America's lowest-cost uranium producers.
Which is huge, because in a commodity business, being the low-cost producer gives you resilience through the entire price cycle.
It's everything. And this brings us to their ultimate strategic advantage, the thing that underpins all of this, the White Mesa Mill.
In Utah, this is their ace in the hole.
It's the foundation of the whole thesis. It is the only conventional uranium mill operating in the U.S. Full stop. It's the ultimate bottleneck in the domestic supply chain.
So why can't someone else just build one if the market is so strong?
The regulatory hurdles, the environmental permitting, the sheer capital required today. It's astronomical, maybe even impossible in the current climate. Owning this mill makes them a vital national security asset.
But this is where the story gets really transformative, because they didn't just sit on this asset. They repurposed it.
A brilliant move. They've turned a White Mesa into this unique dual commodity facility.
So it's not just uranium anymore.
Not at all. It can process uranium, sure, but now it can also handle monazite and ilmenite-bearing rare earth minerals. They've essentially doubled the strategic value of their most important asset.
And they're not just, experimenting with this. They're actually hitting some serious milestones on the rare earth side.
Absolutely. They successfully produced 99.9% purity dysprosium oxide.
And for our listeners, why is dysprosium important?
It's a heavy rare earth element, critical for high-performance magnets. Think EV motors, wind turbines, that sort of thing. But the key isn't just that they made it, it's that they achieved qualification with major South Korean manufacturers.
Okay, that's huge. That's external validation from a world-class benchmark. It proves their quality can compete globally.
It proves the whole pivot is real and scalable. And the next step we're watching for is in Q1 2026.
What happens then?
That's the anticipated start of their terbium oxide pilot production. Terbium is another one of these essential heavy rare earths. Every milestone they hit de-risks this story further.
And the ambition doesn't even stop in the U.S. This is where the scope becomes global with the Vara Mata project.
Vara Mata, spanning Madagascar and Brazil, is what could turn them from a key domestic supplier into a major global player in critical minerals. The latest feasibility study confirmed it has world-class scale.
Okay, when you say exceptional economics, what are the headline numbers that make you say that?
The post-tax net present value, the NPV, is projected at $1.8 billion
$1.8 billion
for one project.
for one project, plus the potential for over $500 million. That's $500 million in expected annual EBITDA. If they execute on this, they become a crucial, large-scale supplier to the West, directly challenging the current supply chains.
That kind of expansion usually requires taking on a ton of debt, though. How's their balance sheet holding up?
This is what's so impressive. The financial discipline has been extreme. Even while funding the White Mesa conversion and the Pinyon Plain ramp-up, they have no meaningful long-term debt.
Really? And what about cash on hand? They've got robust liquidity, about $298.5 million in working capital, and that includes $94 million in pure cash.
So they're clearly not prioritizing things like dividends or buybacks. Every dollar is going back into the business.
Correct. It's all about growth reinvestment, Pinyon Plain for margins, and the rare earth roadmap for the future. It's the right move for a company at this stage.
And the market has definitely noticed. The stock's momentum has been, well, intense.
It's been an incredible run. We're talking massive gains, over 150% year-to-date in 2025. And these sharp surges on news, like a 15% jump in a single day.
So technically speaking, what does that look like? Is the trend healthy?
The stock is trading substantially above its 200-day EMA, which is your classic indicator of a strong, sustained uptrend. And recent breakout suggests new support is forming around that $16 to $17 level.
Oh, there's volatility here.
Oh, yes. You have to note the beta is high, around 1.85.
So for our listeners, what does that high beta actually imply?
It just means amplified moves. When the market is risk-on for energy and commodities, this stock is going to run much harder than the S&P 500. But, and this is the important part, the reverse is also true. If sentiment sours, expect sharper pullbacks.
And this whole trend has some serious government backing, doesn't it? These aren't just market forces.
The policy is the ultimate structural tailwind here. Both uranium and rare earths are officially critical minerals for the U.S. And you have the Department of Energy putting $2.7 billion into rebuilding U.S. uranium enrichment.
Right. That doughy investment is a rising tide that lifts all the domestic boats, because you can't have enrichment without a reliable supply of uranium fuel coming in.
Precisely. The government is essentially building out the pipeline and guaranteeing demand. It sets the stage perfectly for the next catalysts.
So what's the next big event on the calendar that we should be watching?
The next key thing will be the earnings report, which we're expecting in late February 2026.
And what are you looking for in that report?
3 things. 1, the official 2026 sales guidance. 2, confirmation that Pinyon Plain is actually improving margins. And 3, a concrete update on that rare earth commercialization roadmap, especially the terbium pilot.
Okay, we've laid out a very powerful bull case. But for a story this aggressive, you have to look at the other side. What's the bear case? What are the skeptics saying?
The biggest, most immediate risk is valuation. It's stretched. The stock trades at a forward price to sales multiple of around 40 times.
40 times. And what's the industry average for a peer?
The industry average is closer to 4, maybe 5 times.
Wow. So the market is pricing in 10 times the success of its average competitor. You're paying a massive premium for the promise, not the current reality.
You are buying the optionality, and that leads directly to the second major risk, execution, specifically the jurisdictional risk with that giant Vara Mata project.
The one with the $1.8 billion NPV.
Exactly. That number depends entirely on flawless execution, permitting, and financing in places like Madagascar and Brazil.
Which are not Utah. They have very different political and operational risks.
Completely different. Any slippage, any delay there could instantly deflate that massive valuation premium the market has awarded the stock.
And the third risk?
It's about who is selling. You have to look at the money flow. There is about a $6.9 million in insider selling recently, and one large institution cut its stake by over 37%.
Which could just be profit-taking after a 150% run.
It could be. And you can't blame them. But it does signal that even some of the smart long-term money thinks the stock has maybe outrun its fundamentals for now, and they're taking some risk off the table.
So it all comes back to that central question for you, the investor. Can this company grow into this valuation fast enough?
That's the whole thesis. It boils down to two things: their unique asset, the White Mesa Mill, and the powerful policy tailwinds. You aren't buying current earnings. You're buying management's ability to turn all this optionality into real hard results by 2027 or 2028.
So the core question really is whether their ability to execute on these massive projects, like the Vara Mata project, can justify this huge premium as they pivot toward that 2026 margin expansion. It's a high-stakes bet on operational confidence.
And if you want to keep up with our daily market movements and analysis, make sure you subscribe, like, and comment below.